Bloomberg Quint.
Welcome back. You're still watching Countdown with us. Just 25 minutes to go for markets to shut shop, and we have seen recovery from the lower levels of the day. Nifty is still maintaining its gains and trading above the mark of 11,127 points higher for Nifty and about 56 to 60 points higher for the Bank Nifty. And the sectors which were beaten down from the likes of PSU, autos, metals, all of them have bounced back in today's trade, barring the Nifty Media Index because of the selling pressure which has been seen from Dish TV, which reported weak set of numbers, and also Z Entertainment. And in anticipation, let's see if the deal gets announced today or not. But Dish TV has recovered from the low point of the day. Z is still sitting with cuts of about 5%. Very quickly, I just want to pull up what the globe is doing. The European market indices, which saw selling pressure in yesterday's trade. The DAX was down about 2%, but today has been a mixed session. CAC and DAX are just about trading in the positive territory, whereas cuts seen for FTSE 100, which is down about 30 points. Quickly pull up the Dow futures as well. Up about 80 points ahead of that crucial announcement. Let's see what the FOMC puts out today. Market anticipating, or rather expecting, a 25 basis point rate cut from Fed. But back home, we've seen recovery. Let's see which are the Fab4 stocks which Mishika Parekh is tracking today. Hi, Mishika. Good afternoon.
Good afternoon, Navneet. The first stock on my list of Fab4 today is Gujarat Gas. The stock has gained the most in 6 months on the back of very good quarterly numbers. CLSA has hiked target price to 210 from 195 rupees and says that soft LNG prices should be a tailwind in 2019. Also, earnings can be expected to double in the next 2 years. Second stock on my list is JSW Steel. The stock has recovered after a 2-day sell-off, and the company stated that it has been declared as the preferred bidder for another 3 iron ore mines. Third on my list is Quess Corp. The stock has gained as much as 8.5% and it snaps out of its 2-day losing streak. Last on my list is Lemon Tree Hotels. The stock gains ahead of results tomorrow and volumes are trading at 16 times its 20-day average. Back to you, Navneet.
Thanks a lot, Mishika, for telling us those Fab4 stocks of the day. But pull up Apollo Tyres as well, which has moved higher after it reported its numbers an hour back. The stock sitting with gains of about 5%. Remember, these are all your beaten down counters. It's rebounded from its 52-week low. And one of the notes I'm reading, it does say that the numbers have been marginally ahead what the street was expecting. And the surprise actually came in on the gross margin front, where the gross margins expanded 150 basis point on QOQ basis amidst elevated commodity prices. But still, let's see. The gains, however, were limited, tracking the higher other overheads which were seen during the quarter. Margins, as you can see on the screen, at about 10.9 versus 12.5. Coming here, Gurmeet, on the tire makers, Apollo Tyres, CA, the entire space is beaten down, but looking at the valuations too, both Apollo and CA are trading around 10 to 11 times its 1-year forward earnings. Is that a good bet at current levels?
See, while I agree with you, the prices are indeed tempting, Navneet, but I think in the ancillary space, I think one should wait out for maybe another month or so and see if there is a pickup in H2. I think yesterday's commentary by Hero expecting H2 to be better seemed to be a little encouraging, which is probably reflected in the price. I would still go with the time-tested large institutions, which I think they have the ability. I think in ancillary space, it's better off. You're better off looking at players like Minda and others, which are more into more content per vehicle space. As you see more value addition happening in each model, more value for money coming in, whether those are sensors or ABS or airbags or some of the infotainment systems they have. Also, my sense is, and that something around auto from a policy announcement is due. I think the feedback has gone, and my conversation with some of the clients or former bureaucrats tell me that there is a serious consideration on some kind of a package for auto, which probably will immediately impact OEMs more So I would restrict myself into maybe picking up a Maruti, a Bajaj Auto on a dip. Maruti now has an Ertiga which is compliant with the BS6. The product portfolio, upcoming product portfolio seems to be good. And on ancillary space, I'll be better off with something like a Minda or a Sundaram Fastener for now. But we'll go a little slow, maybe a month more. From a timing perspective.
Some pain points today. Aside of course, Coffee Day and Sickle, Sadbhav Engineering is down about 13.5%. GVK Infra is now down sub 5 rupees. For all those who thought such things don't happen, they are happening. This is the operator of a couple of premier airports in India, but currently down less than 5 rupees. And today, Welspun India is down sub 50 rupees, so watch out for that stock as well. PVR is back to 1500, so there are those 3 or 4 names which are looking slightly wobbly in the session. This exhibition space, Gurmeet, would you use these dips to buy into a PVR or an Inox?
See, Neeraj, if you see PVR's run up this year, if last 6 months it ran up almost 50% before hitting that 1800 level, and now with that, so I think my view is I firmly believe that both OTT and cinema experience will coexist. Our per screen, and I'm giving a more long-term fundamental view, our per screen penetration is amongst the lowest in the world. PVR is also, and Inox included, are coming up with very different viewer formats. Whether those are playhouse for kids. We have seen on the higher end, which is the director class and others. So there are various viewer formats coming which will aid the margins. The overall net box office collections, and mind you, these numbers of PVR also had the acquisition of the South-based firm, so numbers are not really comparable on a Q&Q basis. So my sense is, with more screens getting added, we still have more than 50% single screens in most part of the country, which are gradually getting converted. So this market is getting organized. All 3 revenue streams, advertisement, F&B, box office collections, to me will do well. And I think they will coexist with OTT. So I will be a buyer on dips, but we have to be mindful of the fact that it did run up 50% in first 6 months. So maybe gradually, buying them on dips would be a better idea.
Okay, maybe buy on dips might be a better idea. Not currently. By the way, what's flashing up, and by that I mean stocks which were not quite doing well recently, but today are moving up, included TVS Motors, which is up 7%. Delta Corp is up almost 6.7%, so really smart move there for that one. And Vodafone Idea, after 2 days of carnage, literal carnage, has come back up about 4 or 5% in trade. So do watch out for this one too. Actually, a couple of those stocks, so liquid names, TVS Motors and Delta Corp, to each of our technical experts. Manav, to you on Delta Corp.
See, looking at the charts for Delta, we have already seen prices breach the weekly support, which happened few months back, which was backed by some negative news which was floating into the stock. Nevertheless, we have seen the stock enter into a bearish territory so far. So, as long as the stock doesn't breach and exceed and close above 165 levels, I sense, this could just be a short-term pullback rally. And for a sustained move, the stock has to close above 165. So for a near-term perspective, I will still raise some question when it comes to the structure of this stock and at the current zone. So we need some more confirmation into this. As of now, there has been a good volume on the daily charts, but I think for any good move, I think a close above 165 on weekly closing basis would ideally be would give that throttle, and in that case we could see some rally towards 185, 190.
Okay, sharp uptick there. Watch out for Delta Corp. TVS Motors, Ruchit.
It has been one of the underperformer within the two-wheeler space, but today's up move resembles formation of a bullish engulfing pattern on the daily chart. And usually, whenever such patterns are formed after a sharp correction, there tend to be a pullback moves. Also, if you look at derivatives data, then last 2 series there have been formation of significant short positions in TVS Motors. So due to this reversal pattern today, we might see some good short covering move in this stock, and we could see the stock heading higher towards 390 to 400 range. However, that would not be a change in the higher degree trend. The higher degree trend would still continue to remain negative till we get a high top, high bottom structure. But yes, within a downtrend, at least one can expect a pullback move towards 390 to 395 in next few days.
Okay, that's TVS Motors. Just want to mark few more stocks. Tech Mahindra, which touched its 52-week low. The numbers were weak on all parameters. That's recovered from the low point of the day, and it's just about to go into the positive territory. Right now down about 0.5%. The other one, which is an earnings reaction, is Cholamandalam Investment. That's gone up quite sharply in today's trade. In fact, it's one of the top gainers in the futures and options market, up about 7% right now. If possible, if you could just pull up the futures as well and check if there are any long positions which came in at lower levels, because the stock did open on a negative note, 6.5% higher when it comes to the futures side. Very quickly, Richard, on the charts, Cholamandalam Investment surging 6 to 6.5%. Would you take a bet here?
The volumes are good on the daily chart. The only thing is, for a fresh bet, the stop loss is very far because the prices have already rallied by more than 6.5% today. So I would suggest if any existing long positions are there, then they could continue to hold on for target around 271 in next 1 or 2 trading sessions, but not advisable fresh longs.
Okay, not advising taking any fresh longs at current levels for Cholamandalam. Gurmeet, there has been a sharp correction, as you've already mentioned in your opening remarks, across the board, and primarily for the stocks in the broader markets. Are you also seeing any signs of sector rotation now? Where will the money flow in? Because we've seen a marginal bounce back so far for a couple of these pharma companies.
It looks unlikely for me now. I think the buying probably, whatever little I track at a dealer room and what clients are buying, what family offices, and I also speak to a lot of fund managers on the MF side, still seems to be concentrated. While there is a concerted effort being made to seek STPs in small and mid cap portfolios, we also had some funds which were value theme funds like the India Opportunity Fund and some of the others, which did talk about the problem today is this value is being the intrinsic value concept has become an oxymoron. I mean, whether those are debt markets or equity markets, you see Greece 10-year being lesser than US 10-year. So that tells you even debt markets, I don't know which way the world is headed. I mean, the price correction after 70-80%, if there are governance issues. So I think that concept is taken a bit of a knock, and I think it will take a little while before the confidence comes back, where you really start seeing there is value. I agree with you in pharma and some of the construction names and some of the PSU banks. But I think the confidence will take a little while. In fact, I think the flows of MF have to be watched very, very, very closely. July hasn't been a great month. There have been some early terminations on SIPs. And if markets don't improve and 3-year, 5-year SIP returns are negative, the flows which are still keeping some of these mid caps and small cap funds alive can create some issue. So those liquidity has to be watched out very closely as far as the domestic liquidity is concerned.
Okay, some news bits on your screen. Okay, I think we've just taken it off, but I think the number of 22,000 crores for the nutrient-based subsidy, the cabinet has approved that. This is not new. The government gives it every year. There was talk of fixing the nutrient-based subsidy rate for urea in order to promote the balanced use of fertilizer and bring in efficiency in the industry. This is something that a lot of people were tinkering with. Remember, the NBS program was launched way back in 2010. It probably might benefit some companies. We'll try and figure that out. But I think this is not news that is out of the ordinary. Happens every time and might just get some of the fertilizer stocks excited in trade. Gurmeet, a routine annual event, I reckon you wouldn't make an investment call based on this.
No, not really, Neeraj. One can maybe look at some of the agrochemical names in this space, as I think the thrust on agriculture and focus on welfare schemes will continue. I mean, there are few. I think UPL, despite all the headwinds, looks better. May not be related to what the announcement has come, and maybe PI Industries, which has a nice combination of CRAMS and specialty business as well as agrochem. So maybe those are the two bits we have in our watch list, but nothing really to do with this announcement.
By the way, keep in mind UPL and etc. come out with numbers, but I just want to pull up the stock price of Godrej Industries. There's a sharp uptick there in the last 30-40. Even MRPL, both of these names, just a big blip up for both of these stocks, Godrej Industries as well as MRPL. The stock is up about 11.5% MRPL, and look at that sharp uptick there on both of these stocks. Don't quite know the reasons, I doubt. I mean, no connection to an announcement that has just come, maybe some other announcements, but yeah, both of these stocks, just a really sharp uptake that has happened. In addition to these, of course, there is traction in Magma FinCorp, for example, that is moving up. Johnson Hitachi's moved up, Mahindra Holidays has moved up, Reliance Infra has moved up. So a clutch of 4-5 names, all of which having some very sharp up moves. Some of them fairly liquid as well, by the way, but moving up. Anything out of these names, Ruchit, that stands out for you? Some sharp moves here.
I think amongst the liquid names, Godrej Industries certainly seem to have formed a good support around 440 kind of level. Although today in intraday it was breached in the morning, but the kind of volumes have been seen in last 15-20 minutes. I think this stock could give a up move in short term. Difficult to time the entry in this stock, because now the stop loss would be quite far, which would be around 440. So in case if there is any dip, the average closing might be lower, because the up move has been seen after 3 o'clock. So if we get any dips to around 465, then one can take a long trade with stop loss below 445.
Okay, that's a sharp move on Godrej Industries. Remember, consumer comes out with the numbers tomorrow. We'll wait and watch how the numbers pan out. But as of now, the move is quite sharp that you can see on the screen. ICICI Lombard General Insurance, that too has seen a very sharp move today. It's up about 5% in trade. Before we get a fundamental view on these insurance companies, I just want to take closing strategies from our technical experts. Manav, let me come to you. Any BTST or any STBT for tomorrow's trade?
Yes, at the current levels, if you're looking, the IT packs is showing some sort of a resilience in the past couple of trading session, and my one buy call would be on HCL Technology, which is a BTST. If we see, the prices have managed to exceed its recent 4 to 5 trading sessions highs and is likely to close above it, and is also breaking over short-term averages. The volumes are also confirming. I sense in the near term a very good risk-reward entry for HCL Technologies on the lower side. One can keep a stop loss of 1015 and can expect an upside target of 1065.
Okay, HCL Technologies has been bucking the trend. At least yesterday also markets were down and we did see some bit of positive moves here. Richit, your closing strategy would be?
Recommend option trade for BTST. Nifty tomorrow's expiry 11,100 call option can be bought here. We have seen that today even the market breadth from the lower levels have turned positive. So we expect some positive move in tomorrow's trading session as well. So 11,100 for tomorrow's expiry is quoting around 40 rupees now. One can go long on that with stop loss below 11 rupees and expect target around 80 rupees tomorrow.
Okay, so Richard's advising to buy the 11,100 call of Nifty for tomorrow's expiry. Tomorrow is Thursday, so you'll have the weekly options expiry. Gurmeet, wanted to take your view on the insurance space. So far, we've been talking about taking refuge into quality companies, HDFC Bank, HDFC or Bajaj of the world. But is this also a space where one can look at, because it's still under-penetrated? We've been talking about it, and off late, a lot of market experts who've been coming on our shows have been advising to buy insurance companies.
Definitely, both life and general. Navneet, if you see the HDFC Life results, if you see the VNB numbers, I think they exceeded the expectations. I think the non-participatory products, which are the traditional products, I think are gaining traction. There's a lot of product innovation happening, Navneet, with you. So I think with SEBI clamping down on expense ratios for mutual fund, with upfront fees getting reduced, the shift of the bank has moved towards more towards insurance. It's reflected in the sales of even if you see the ICICI Bank numbers, the third party had a bit of if you see the breakup, the MF distribution fee was down, but the insurance numbers were up. They are obviously, they offer high margins first year. And as the mix improves, they also have versus ULIP. There's a lesser risk. ULIPs carry more market risk. The investment income can keep fluctuating. The traditional products only have balance sheet risk and a reinvestment risk. But if you have a well diversified portfolio, that is taken care of. Also, the growth of online sales is both increasing the persistency ratio as well as bringing down the commission part as far as the online numbers go. So positive on life. Even in general insurance, I like Lombard. I think the new MISP guidelines, if you see, are placing some underwriting discipline and uniformity in dealer commissions. The third party pool will improve the profitability. If you see, their risk management processes are far better. In natural catastrophic events, their share is sub 6% versus an 8%, which is industry standard. We saw that with Bajaj Allianz numbers getting impacted due to higher claims in the general insurance side. Even in reinsurance, they only do A and above versus the regulatory requirement where you're allowed to basically do triple B minus and above. Also, the crop insurance seems to be a very, very big focus area. The government has recently changed the guidelines to a model which is now on a risk transfer basis, which is basically, in very layman terms, is percentage coverage of the field or the crop, which means your ticket size will grow up. And this is a one sunrise subsector in the insurance which can give good growth. So overall, and you're right. I don't want to really speak on the penetration bit. We know it's all low. So both life and general, ICICI in particular looks very good.
Okay, well, both life and general look good to Gurmeet Chadda. Gurmeet, before we thank you, just wondering, would you by any chance even contemplate buying into Vodafone Idea at 6.5?
Not at all.
No, the risk reward is not in favor.
The bear market always teaches you new lessons, but the old lessons are there. Leverage excessive debt is a sure recipe for disaster.
Yeah, well, maybe. I was wondering if there's a lesson out there which says that, yes, there is debt, but if the pain is in the price, then go out and buy. I'm not suggesting the pain is in the price, by the way. I'm just asking you.
Yeah.
Okay, Gurmeet.
Airtel looks a better bet. Yeah.
Okay, Airtel looks a better bet. Great. Gurmeet, good having you as always. Thanks much for taking the time out and look forward to having more often on the forum. That's Gurmeet Chadda. Always a pleasure having him on the show. Just before we wrap up, can't not talk about the top gainer and the top loser. It's a deal day, so maybe difficult to ask our guests to take a call on Z. So I'll leave that out. I'll revert to the second top worst performer, and that's Axis Bank, which is at 675. Manav, we spoke about this earlier, but if somebody's short on Axis, would you carry home the short positions?
No, I wouldn't carry for a simple reason. The prices have already reached its lower threshold limit, and it's nearing into its important weekly and monthly support zone. I sense on the near-term perspective, there is a likely chance the stock may just find a sideways corrective decline, but anybody who's holding short position, I think it's good time to at least book your profits. And on the lower side, I believe that 655 and 665 are very important cushion for the prices. As if these prices hold on, there is a likely chance that in fact the prices would rebound from the current levels and could see a near-term bounce at least towards the levels of 720.25. The overall structurally the stock trend has been quite bullish. Yes, the weekly scale has turned negative, but at the current point, it's a good time to at least exit your shorts.
Okay. And Ruchit, just very quickly, if somebody was long on TVS, would you recommend carrying home the long positions?
Yes, I think as we discussed earlier, so the stock price is forming a bullish engulfing pattern on the daily chart. So we expect this pullback move to continue at least up to its 20 days moving average, which is around 390, 395. So one can carry on the longs, and around 390, 395, one can again review to book profits.
All right, gentlemen, stay on. We'll take in closing thoughts from you, but here's how the markets are shutting shop. In the green, which is a bit surprised today, we started off in the red and ending in the green. It's not something that we're used to seeing the last few days. So maybe the bulls might be breathing a sigh of relief, really. The mid caps and the small caps, those indices will also come up on your screen. In the green, and the market would be interesting. Navneet will speak more about this, but 1.33% is not a bad performance at all, considering what we've seen in the last few days. I'm very interested in seeing the FI number today. The last 2 days, the FI selling was not as severe. Let's see what the number looks like in today's session. But let me sum up the large caps first and what's happening here. IndusInd Bank, 5.5%, so good show. Yes Bank, 4.5%. Some strength in Tata Steel, but the two-wheeler and the auto companies, so Hero MotoCorp up about 3.5%. Some of the others too are in the green, which is not a bad sign in the auto space. Sun Pharma, UPL, Grasim, JSW Steel are amongst the other companies which are in the top 10 gainers list. But autos, remember, have done reasonably well today. What's not done well? Results reaction on Axis Bank, a possible pre-deal movement in Z. Bharti about 2.5% lower, Titan 2.5%. Reliance Industries continues to grind lower. One reason why the markets have been under a bit of check is Reliance the last few days. And then deep down, Maruti Suzuki, while autos may have looked slightly okay, Maruti still continues to remain under pressure. Remember, the monthly sales numbers come out tomorrow, and those would be very, very crucial from an auto and auto component perspective. But if large caps have done okay, mid caps have done really well. Navneet, what's standing out?
Well, Neeraj, majority of the stocks which went up today were also the ones which were trading at 52-week lows. So let's see whether today's bounce was a dead cat bounce. We need to see some bit of incremental gains coming in the coming days. But first up is Apollo Tyres. They came out with the numbers today. The numbers looked better than what the street was expecting, especially on the gross margins front, which expanded sequentially. And you did see the stock reacting positively post the numbers. This one, by the way, too touched its 52-week low, and post the numbers, you saw the gains coming by. The other one is Apex Frozen Food. This one also bounced from its 52-week low today. 10 to 11% gains seen here. The stock's looking to close around the level of 240. Tejas Network, which was falling after its numbers, but in the last few days we've seen some bit of recovery. However, markets were weak yesterday, so the stock also fell 9%. But today it's closing. I think 10% is the upper circuit for the day for Tejas Network. So 90.9 is where it's closing. And United Spirits also saw some buying momentum. The stock's closing with gains of about 4.5%. Around the levels of 593. Cholamandalam Investment, they came out with the numbers yesterday, and a strong move seen in today's trade. The stock's closing at high point of the day, over 6%, 258.6. A couple of these pharma companies bounced back. So you had Aurobindo Pharma featuring among them. The stock's closing with gains of 3%. And we were talking to Gurmeet about the insurance company. You had ICICI Lombard in that pack, which went up about 4 to 4.5%. On the losing side, Coffee Day Enterprises and Sikkim Logistics, second straight day of lower circuit for both these stocks after the news came in of their co-founder VG Siddhartha, whose body was found today. So 20% shaved off for both these stocks today as well. PVR has been reacting negatively post its numbers, which were weak. Short positions continue to build up on the future side. The stock's closing with cuts of 4%. Biocon from the pharma pack was weak, in fact, today. So that stock seen cuts of about 3.2%. And lastly, Dish TV, which came out with the numbers which were weak, and the stock's closing with cuts of 4.5%. But we did see some bit of recovery from the lower point of the day. And as Neeraj was highlighting, Z as well as Dish TV will be in focus in case there is any announcement which comes in the evening.
Yeah, but pull up the turnover and let's see how the volumes have been like. The market breadth, I'm guessing, would have been positive, and we'll get to that too. 15 lakh crores on the F&O side, and the cash market volumes too very high. So today with above average volumes for sure.
Yes, and cash average has been somewhere between 30 to 31, so it's been above. And F&O, I think one day before the weekly options expiry tends to pick up.
Yeah, and the market breadth should be positive, but okay. Maybe trying to veer towards the positive side. It's surprising because the mid-cap index was up 1.5%. I would have thought that it would have been big time in the green, but clearly not the case.
Not the case for the entire listed universe, actually, on the National Stock Exchange. Lastly, I just want to pull up the contributors list among the Nifty constituents. That's going to give you a picture what actually contributed to the gain. So IndusInd Bank, TCS, Kotak Mahindra Bank are a couple of stocks which were up and about, but dragging the index lower was Axis Bank and your heavyweight Reliance Industries. The stock continues to trade below its 200-day moving average. Watch out for Bharti Airtel. This one comes out with its numbers tomorrow.
Yep, let's wait and watch what happens. Final thoughts from our experts. Manav, to you first. On the basis of what we've done today, do you expect that if the Fed doesn't play spoil sport and if the globe is supportive, we have a chance of moving back above those 200-day moving averages for the Nifty?
See, when we're looking at the world market charts, yes, definitely they are at a very, very different range. Looking at the chart of Dow Jones, S&P 500 and Nasdaq, they have seen a very good pullback rally from its recent lows and it's at all-time highs. We have been underperforming lately and majorly because of some post-budget events. Looking at the charts perspective to the event lined up, I believe we are in the oversold levels. A lot of things have already been discounted. Negative events have taken place into the picture. The important key triggers for the bulls on the upside would be 11,200, Neeraj. So there could be a lot of choppiness in the market as long as we are below 11,200. Once if we exceed and break above that, I believe that could lead to some initial pullback rallies which could open the gates towards 11,400, 500. But we need to see some sort of a closing above 11,200. A lot of stocks are in deep oversold levels. We have seen initial signals of short covering which has happened today, but most importantly, we need to see some sort of a follow-on move, which we need some closing above to certain levels. So as of now, we are definitely not being short in the market at the current levels. Now we are recommending for fresh shorts, but we are very much game and ready to take some long positions. And on the index level, like I mentioned, 11,200 closing and above would be quite bullish for the markets, at least in the near term.
Okay, Ruchit, what would your thoughts be?
I think yes, markets have definitely given signs of a pullback move, at least from its support of 11,000, what we have seen today. And one good thing is that if you look at the Nifty Mid-Cap Index, then today's low in the Nifty Mid-Cap Index marks around the potential reversal zone of a harmonic pattern, and the index has also formed a bullish candlestick pattern on the daily chart. So one can expect some pullback move in many of the beaten down mid-cap names. So yes, from next few days perspective, now having said that, this would not be a reversal of the trend which we have been seeing post budget. The trend would continue to remain negative until we get a high top high bottom structure. But yes, within a downtrend, one can expect a relief rally in next few trading sessions.
Okay, gentlemen, we'll leave it at that note. Ruchit as well as Manav, appreciate you joining us today and taking us through the technical views on the markets. Well, with that, it's a wrap on this edition of Countdown. Thanks a lot for watching. Goodbye from Neeraj, my side, and the entire team who put this show together. Stay tuned to Bloomberg Quint for more news and updates.